I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk with you. This has been an interesting week. Monday, Robert Mueller indicted 3 people with this Trump investigation. And then today, the Fed had a meeting. We were supposed to get the tax plan today revealed by the House Ways and Means Committee, and they delayed that till tomorrow. And to top it all off, we're supposed to get a new Fed chairman before this week's over. So lots of stuff's going on in the news cycle this week for sure.
And how is that affecting the markets?
Well, in a way, I'll talk about each one. First, the first news, the Trump and Mueller thing. You know, I know the American media in the United States is very split among partisan lines. What some people watch is Fox News and the more conservative media, and then the rest of the country, or half the country, watches MSNBC or CNN and reads the newspapers, and they have dramatically different views of what's going on. If you watch Fox, there's supposed to be a Clinton scandal that's very explosive about uranium that, could derail Mueller, or he's linked to it. Now, if that's true, I would think that Trump will order the Attorney General to break that wide open and make this a real investigation. If that doesn't happen, then I think this is like what Trump would call a fake news story. And then the other side of the media, Mueller and indicting these people, even if this is going to lead to something, it's going to take months, if not, another year, for it to culminate. So I don't really think that news has any meaningful short-term impact at all in the stock market. In fact, the Dow is down about 80 points on Monday on the open and has made a new high since then. Yesterday it gave back all those, it took back all those losses. So it's just I think it's just like as far as investing and trading the markets go, to me, that's just a noise thing. Today's Federal Reserve meeting, also, there's no meaningful change. I'm looking at the statement right in front of me, from the September statement at all. They're still on track, to raise rates in December. And then, there's no deviation from the plan that Janet Yellen actually announced last summer, in July, which was to raise rates, 1 or 2 more times by the end of this year, and then pause on the rate hikes, in hopes that the economy will pick up, enough to cause inflation to get near that 2% target that they're looking for, which it still isn't at that level at all. And they're predicting that it could get there by the end of next year. Then they would be able to raise rates more. Who knows if that's real? One pattern since 2009 has been that the Federal Reserve makes predictions that the economy is going to really take off and grow, and then it doesn't, and they keep changing their predictions and so forth. So I don't really put too much stock in that. The more, I think, meaningful news will come by the end of the week, possibly tomorrow, when Trump finally says who the next Federal Reserve chairman is going to be. And there is a possibility that, a very small possibility, that he could choose John Taylor, who's on the Federal Reserve Board right now, and he's actually a leading opponent of keeping rates super low as they have been for years. And he argues that interest rates should be 2 times higher than what they are, that what the Fed has done is created financial bubbles over the years by keeping rates too low without helping the real economy. And I really think those are real and true arguments. And last year during the election, Trump actually said these sort of things. However, press leaks out this morning say that Trump is leaning towards picking Jerome Powell to be Fed chairman, and he doesn't believe in these things. He's essentially a Janet Yellen clone. I think that's the best way to describe him. And he believes in low rates and not making any real deviations from current Fed policy. So if Powell is picked, then I would think that, what we've seen over the past years is going to continue in regards to Fed policy. I would say the odds of this are 95%. However, what does it mean for the markets? Where the market's going? Well, the stock market's obviously had a huge rally this year, and it's overvalued. I mean, the cyclically adjusted PE is now above the level of 1929. Of course, valuations have been high for the past couple of years, and that doesn't in itself cause the stock market to drop. But what it does suggest is when the next bear market does happen, it will be devastating, much like the one of 2000 was, because it's going to start with stocks at such a huge plateau. Now, I don't see any sign of that starting over the next couple of months, and I don't think it will, but it's a long-term warning sign. What this means to me, though, is that the people trading the stock market are doing so on a short-term basis. Over 60% of the volume isn't from individuals, or hedge funds even, or institutional human beings, but stock trading robots that just trade on an hourly basis. They don't care what the valuation of the market is. They don't care what is going to happen with the tax bill, before the end of the year, if it's going to pass or not. They don't care about anything when it comes to fundamentals except what's happening this minute with pure price action. So it's a very short-term oriented market among the people actually doing the trades. The people invest in the stock market mainly are doing so through ETFs, passive investments, where they just ride it up as long as it lasts, and until the market comes off its highs by like 10%, they're going to really continue to do that. So that's kind of the situation there. With gold, I'm a long-term gold bull. I started, really pounding the table that gold had bottomed last year, and I know it's only up slightly this year. The GDX gold stock ETF is only up about 5% this year, not up as much as the S&P 500, which is up about 14%. But it was up 50% last year, and following years of a devastating bear market. So to me, gold mining stocks are early in a bull market, and it's a good time to accumulate them. But I think the people that invest in the precious metals area are looking at the long term. They're not investing based on short-term price action at all, because it's been lagging the other averages or the U.S. stock market, but they're investing on the future, which is the next bear market in the U.S. When it does come, it could be 6 months from now or a year from now, whatever the case. It's likely to be devastating and cause the Federal Reserve to backtrack on its current policy of slowly raising rates, and doing this taking back some of the quantitative easing extremely slow. They're trying to do it over like a 30-year period, but any correction in the stock market will make them, reverse all that talk of their current monetary policy track. And the only thing that would stop them from doing that is if this John Taylor actually gets picked by Trump, because he's someone I think that doesn't think the stock market should be the priority, but Yellen does, and this Jerome Taylor certainly does. So this week's going to be very interesting. It's not so much what has happened or even with the market, but who Trump picks could really set the stage for years in regards to all this. I mean, if he picks John Taylor, it would actually cause, I think, gold to drop and interest rates to go up much more than what today's Federal Reserve policy would suggest. But the thing about it is, look, over the past year, despite what Trump said during the campaign, he's been cheerleading the stock market on Twitter. Yesterday, I watched him on television. He met with a bunch of CEOs for a television a video that was on TV, and he touted the stock market gains. He said something like, we've created $3 or $4 trillion of stock market gains this year, speaking as if that's GDP growth. So the stock market's very important to him, and that makes me think, he's really going to get this Powell character and not John Taylor.
We'll have more with Mike Swanson right after the break.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
Welcome back. We're chatting with Mike Swanson. Mike, usually when interest rates go up, that means the value of your currency goes up. Is that something they want to do?
Well, it's interesting because right when Trump got elected, during his transition period before he came into office, he had a team of economists creating position papers and trying to figure out who are we going to appoint for the Treasury and do this. What are we going to, how are we going to, change things? And he had people that advocated for a strong dollar and higher interest rates, with the assertion that higher rates would create a strong dollar. And in fact, the dollar initially did rally, and interest rates, that are traded on the long-term Treasury bonds, the 10-year, 20-year bonds, those rates went up, for about a 6-week period. If you can recall, gold dumped too, into January, because there are these people around Trump that were recommending higher rates and a strong dollar policy. Those are things I personally do think are good for the best interest of the American economy in the long run. However, again, once he got in office, all that talk was completely abandoned. These type of advisors were essentially pushed to the side, and risen to the top was Steve Mnuchin, Trump's Treasury Secretary, who came out of Goldman Sachs, and he doesn't seem to be a believer in the strong dollar. And there was a time this year where the dollar did go up, and Trump said basically it was going up too much. So it does seem that we are in not a strong dollar. We have an administration that's not a strong dollar administration or a high interest rate administration. Instead, I think what Trump is focused on is tax cuts, in the hope that, if he can get a tax cut bill passed by Congress, that can stimulate the economy and create economic growth and cause the economy to catch up with the high stock market valuations. Also abandoned is the idea of an infrastructure package, which was also a key component of his campaign and also talked about during his transition period. That's essentially been abandoned too, because it's simply the political difficulties of getting something like that passed. It kind of vanished along with the healthcare attempts to get rid of Obamacare. So we're in a situation where Trump won election, and but not really with overwhelming with a divided political party and a opposition party completely against him, and that's really been a difficulty in getting infrastructure passed, getting Obamacare repealed, and could prove to be a difficulty with the tax cut. So here we are. Really, I think this is what Trump and is left with, is the hope that tax cuts can be passed and can do all the work that everything else wasn't able to be done. And he's, abandon the strong dollar, higher rate policy. So in a selection of Powell, if that's what happens, will really demonstrate that that's a fact. So we'll see for sure with that. But, I would like to say, though, that I don't know what's going to happen with the tax cuts, if they're ultimately going to be passed or not. If 3 people in the Senate defect in the Republican Party, then it's going to collapse just like the health care bill did. That's assuming it gets through the Republican Congress. The bill's a secret right now. We all want things done positive for the American economy. We want our congressmen to do something, but, we want them to do something that makes sense too. And without knowing what the bill is, I personally have no idea if it makes sense or not. But I just want to say, though, that assuming it doesn't pass, I would like to argue that itself won't derail the stock market at this point, because I think the stock market has now reached a point of pure price momentum where it's gone up so much this year that the people trading the market, as I mentioned, the day trading robots providing like 60% of the volume, they are trading based on pure price, and they really don't care what the headlines are or what's going to happen 6 months from now. And as long as the price momentum is up, bad news items can just temporarily gap the market down and be excuses to buy. In fact, it could be that this has actually been the environment we've been in since January 2016, in which all news doesn't really matter and everything is just a buying opportunity until this rally actually does end. So for instance, the Brexit vote, right before it happened, CNBC and the financial media was saying if Brexit passes, it's going to be like a total disaster and debacle. And the financial media, the CNBC people, they are indeed biased against Donald Trump in such an extreme manner that going into the election, they were saying that if Trump won, the market would crash or run into severe difficulty. And what happened? He wins and it rallies. So anything that's perceived to be bad news has been bought in the stock market, and even individual bad news items since Trump won, like the whether you like Trump or don't like Trump. Certainly, the news Monday that this Mueller guy is indicting 3 people is not good news for Trump. And it's a sign of political instability in the United States, which isn't good news if you want Congress to be able to do anything. But all that happened was the market gapped down 80 points and it went up. So until the rally's over, I don't really think the news matters unless it would have to be some singly, truly shocking event, which actually if Trump were to nominate Taylor, that would fit the bill, but that's why he's probably not going to do it.
We'll have more with Mike Swanson right after this.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're chatting with Mike Swanson. Mike, a lot of the people I talk to are technical traders who don't watch the TV news. They don't care about the political debates. They just take a look at where we are in particular parts of the cycles, if it's gold, oil, whatever, and that's how they trade. So to them, whatever Donald Trump does doesn't matter. How do you feel about that?
Yeah, I think that's correct. I think that in a way that's the way they should be doing it, because it's like I was saying, if the news doesn't matter in really changing the overall trend of the market, then you need to pay attention to something else. everyone in this business kind of has their own unique way of approaching the stock market. As you mentioned, a lot of your guests look at cycles, and I do too. I make mine, I really simplify it though. I just say, are we in a bull market or a bear market? And like a lot of people use Elliott wave theory, which to me, I've never been able to get it to work. It's just too complicated for me to use. But, you got people that use all different things than that. But my simple method of, are we in a bear market or a bull market? Well, to me, obviously the U.S. stock market's still in a bull market, and I'm looking for signs that it's actually over, at some, and I don't see them yet until I can, say, oh, something has dramatically changed. With gold, though, to me, we're only 2 years in a bull market, so we've got to attempt to invest early in a cycle and not late in a cycle. So from an investment standpoint, I really like gold. And commodities in general, they tend to have a cycle in which gold and silver go up first, and then agriculture and soft commodities go up next into a bull market, and oil and energy last. And so right now, the agriculture complex has not yet started a bull market. They just made a new low a few months ago, even though they're off that low, but they did that. So I'm looking for a potential investment buy point there. And when it comes to the U.S. stock market, I have zero interest in actually trying to invest in it with new money, but trading it, that's a whole different way. It's a whole different story. So that's kind of how I am, which is a little bit, your guests are, they're not like the typical person you see on CNBC, or the typical American for that matter, who is so obsessed with only the U.S. stock market, and they think, well, that's the only thing you can invest in. So I kind of fit in more of your show and your line of thinking with yourself and your guests than what people are going to catch on CNBC.
Mike, thank you so much for chatting with us.
Thank you. It's great to talk with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. You're listening to HowStreet.com Radio. Any questions for the show or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.